Welcome back to Dinar Community, your go-to hub for insightful updates on the Iraqi Dinar IQD Vietnamese Dong VND and the latest waves of global financial transformation. Whether you're a seasoned investor or new to the world of foreign currencies, you're in the right place. We don't just report numbers, we unpack their meaning, explore strategic implications, and help you understand how these developments could reshape your financial future. Today's story is nothing short of historic. The Central Bank of Iraq (CBI) has sent shockwaves through the currency world by officially fixing the Iraqi dinar at an extraordinary rate of $4.98. Simultaneously, the Vietnamese Dong has made headlines by crossing the $2.90 benchmark. These aren't speculative spikes, they're verified moves acknowledged by each nation's central financial authority. These revaluations mark the culmination of long-term reforms, economic recalibration, and an assertive step toward financial autonomy. They're not just technical adjustments, they're defining moments for both countries on the world economic stage. Iraq's monumental revaluation, $4.98 per dinar. In an unprecedented move, the Central Bank of Iraq has anchored the dinar at $4.94, a leap that financial experts are calling one of the most significant in modern history. This milestone didn't appear out of thin air. It follows over a decade of painstaking reforms, strategic financial restructuring, and economic vision. For years, the dinar's value was hindered by an outdated dollar auction system, a framework rife with inefficiencies and exploitation. That system is now officially dismantled, allowing Iraq to regain control of its monetary policy and free itself from dependence on the US dollar. The new fixed rate is more than symbolic. It broadcasts to the world that Iraq is serious about its financial comeback. It boosts national confidence, revives trust in the currency, and is already attracting attention from foreign investors eager to tap into Iraq's renewed potential. Vietnam's silent surge. Dong hits $2.90. While Iraq claims headlines, Vietnam is quietly making its own powerful statement. The Vietnamese Dong has surpassed $2.90, marking a new era for the Southeast Asian economy. This surge isn't about speculation, it's the result of disciplined, long-term economic growth, focused infrastructure investment, and aggressive expansion in global trade. Vietnam has built a strong manufacturing base and now ranks among the top exporters of electronics, textiles, and food products. With favorable trade deals and a growing global footprint, Vietnam is positioning itself as a rising power in the region. Projections show Vietnam's GDP could grow between 6.5% and 8% in 2025, further boosting the Dong's stability and appeal. For early holders of the VND, the appreciation reflects not just rising numbers, but a validation of Vietnam's transformation into a disciplined, export-driven economy. Reform-fueled transformation. These historic currency shifts are the result of deep-rooted policy changes, not temporary boosts. Iraq has brought in major global banks like Citibank and J.P. Morgan, boosting trust and enabling transparent international transactions. The CBI's move to introduce smaller denomination notes signals a return to normalcy in domestic financial activity and a commitment to stability. Iraq is now better aligned with international financial norms, and the reforms are already reshaping the investment climate. With oil revenues, agriculture, technology, and other sectors poised for growth, foreign direct investment is gaining momentum. Similarly, Vietnam's ascent is tied to practical planning and global integration. The rise of the Dong reinforces the belief that real economic strength, rather than manipulation, drives long-term currency value. What it means for you. For currency holders and investors, these moves could be life-changing. In Iraq, the dinar's revaluation could lower the cost of living, reduce reliance on foreign currencies, and revitalize domestic growth. It opens the door to increased investor activity in sectors like energy, manufacturing, and technology. In Vietnam, the stronger Dong boosts public confidence and enhances the country's economic clout. However, a sharp rise in currency value also brings risks, particularly for export-heavy sectors. Both countries must carefully manage their growth to avoid overheating or speculative bubbles. A broader global shift. Experts across the financial landscape agree, these are not isolated events. They are part of a larger realignment of power in the global financial system. Influential voices like Mark C. Frank 26, and Malikana see Iraq's revaluation as a bold, Calculated move following International Monetary Fund (IMF) recommendations, a gateway to full financial sovereignty and global market integration. Some analysts even suggest that other nations with undervalued currencies might follow suit, initiating a ripple effect of revaluations across the globe. As emerging economies assert themselves, the traditional balance of financial power may shift permanently. Proceed with strategy, not emotion. While the outlook is promising, it's crucial not to get swept up in the excitement. Both Iraq and Vietnam still face real challenges: political instability, oil dependency, and external pressures in Iraq, and inflation management, speculative risks, and export sensitivity in Vietnam. If you're holding IQD or VND, now is the time to seek professional advice. Speak to a financial expert experienced in foreign currencies and global markets. Evaluate your risk profile, consider tax implications, and diversify your investments to protect against volatility. Final thoughts. The future is now. What we are witnessing isn't just a currency event, it's a financial awakening. Emerging economies like Iraq and Vietnam are breaking away from Western-dominated systems and stepping confidently onto the world stage. This is more than de-dollarization. It's a push toward localized financial control, decentralized markets, and multipolar global economics. For investors, that means the field of opportunity is widening. The next big investment zone might not be New York or London, it could be Baghdad or Hanoi. As the IQD settles at $4.98 and the VND surpasses $2.90, it's clear that a fundamental shift in global economics is underway. Stay informed, stay smart, and above all, stay engaged. Because the financial revolution isn't coming. It's already here.